The stock of the day is brought to you by IG, Australia's #1 CFD provider. Trade over 17,000 markets with extended trading hours on key US shares and competitive spreads, all on an award-winning platform. Get started at IG.com.
Let's get to it, because the stock of the day, I think, is a really interesting one when you put all of that into context. It's ARB. So you know it. It sells all of the gear for four-wheel drives primarily. Its shares are absolutely tanking today, down to their lowest level in 3 years after the manufacturer forecast lower first half earnings. First half total sales revenue fell 1% to $359 million, and ARB is tipping FY26 underlying profit to come in at $58 million, which would be down 16% on FY25. So it's pointing to two key contributors to the decline in profit. First, lower gross margins driven by a weaker Aussie dollar. And second, ARB is mentioning higher inventory levels. It is having a bit of trouble in the US. ARB will report its half-year results on the 24th of February. So we've got a while to wait before we see all of the numbers in all their glory and hopefully get a bit more meat on the bones of an outlook statement. So let's begin, shall we? Michael Wayne, Medallion, ARB. Did you like it before today? Did today's news change your view?
It's not one we've really been following more recently. Historically, it was a market darling. It was one of these compounders that was delivering solid growth year after year. But in more recent times, that growth that everyone had become accustomed to has certainly slowed, and it's become a lot more difficult for this business. It's still a decent quality company. There's no two ways about it. It's got a very strong position in the aftermarket parts business, particularly for four-wheel drives. It also is vertically integrated. It produces a lot of their own products. It manufactures them, distributes them, and then sells it also into retailers. But yeah, the growth numbers aren't as good as they used to be, as I touched upon. And the momentum for the growth is also, pretty negative as well. So there's been significant margin pressures for the company. They've had struggles with, the direction of the Aussie dollar. Whether or not that is maintained, who knows? But I think, when you consider this was a business that historically was growing at 10, 15% a year, these days, revenue's lucky to grow at all. And also their earnings growth has actually been negative over the last sort of quarter or so. So yeah, I'll be turning my attention elsewhere. It's not the growth business that it once was.
So that's a sell.
That's a sell.
Buy, hold, sell for ARB, because if it's such a quality company, it's got a pretty good balance sheet. I mean, the balance sheet looks pretty clear. Is this one of those opportunities you were speaking of?
I'm not as prepared on this as I should be, because I didn't get the stock on my trip in from our offices in North Sydney.
Apologies.
So thank you, Michael, for putting the infrastructure in the back end. I put it in the too hard basket for a couple of reasons. We are in a market where there's no tolerance for misses. We're not in one of those markets where people buy dips. They're not buying dips in individual stocks. They might be buying dips in the market, but they are not buying dips in stocks out of favour. So that's a cross. There's no tick there. It's missed. It's disappointed. It's not growing. The Australian dollar hasn't done a great deal over the last year or two. Been a bit soft, but that feels like almost a bit of a smoke screen to me. Shouldn't be having that big an impact on its earnings, so I haven't checked the numbers, I do stress. I just don't think you need to be there. So I'd call it a sell as well. It isn't a bad business by any means. But if it can't, it doesn't need to be there. There are better places to be.
Okay, there you go. ARB stock of the day at one point today down by about 15%, but still, my guess is not seeing value in it right now.
The stock of the day was brought to you by IG. Trade over 12,000 shares and ETFs, including major tech giants with extended hours on an award-winning platform. Get started at IG.com.